I'm putting the seatbelt on. I think silver is the place to be for the next 2 quarters, and the move could be enormous. And you look back and say, oh, now I understand why. Supply demand's been tight, et cetera, et cetera. Market has been an irrational level for too long compared to other metals, for example, that have done the same thing, had a tantrum and moved to a new reality. Anyway.
That we're getting into a new paradigm. I don't like to use that lightly, but, and I think Michael said it best. I mean, we're in a situation where reality is going to shine through on all the naysayers like they can't believe it. If things go higher for AI or EVs or what have you, it'd be beyond that.
Silver has finally done it. After decades of suppression, speculation, and skepticism, the metal that so many dismissed as a poor man's gold has exploded past $50 an ounce, marking a new all-time high. This is not just another market rally. This is vindication. For years, the silver community, from small-time stackers to institutional analysts, has endured ridicule for holding faith in an asset most of Wall Street ignored. Yet, through it all, through the digital asset mania, the rate hikes, the liquidity crunches, and the paper manipulation, they held on. And now, the day they've been waiting for has finally arrived. Silver has broken free, and the world is starting to take notice. What makes this moment so significant is not only the price itself, but what it represents. The move above $50 signals a structural revaluation, one rooted in tightening supply, unprecedented industrial demand, and a monetary awakening that has been quietly building for years. The data tells the story. Global mine supply has stagnated around 820 million ounces annually, while industrial consumption, driven by solar, EV batteries, and electronics, is projected to surpass 1.2 billion ounces this year. The deficit has become chronic, not cyclical. But the real story isn't that silver has reached $50. It's that this breakout may only be the beginning. If the fundamentals that these analysts have been tracking for decades continue to converge, declining ore grades, record industrial use, and renewed monetary demand, silver could easily enter an entirely new pricing paradigm. In today's video, Michael Oliver and David Morgan delve into what this breakout means not only for silver investors, but for the entire macro landscape. They dissect how gold and silver's simultaneous rise signals a shift in global monetary confidence, why current pullbacks should be seen as opportunities, and how the repricing of tangible assets could reshape global markets. Stay with us as we unpack their insights, and what they mean for you, the investor who's been paying attention while the rest of the world slept. Before we move to their analysis, take a second to subscribe if you haven't already. The insights you're about to hear go far beyond price charts. They speak to the structural forces driving this new bull cycle in precious metals. So stay tuned, hit that like button, and let's dive straight in.
First of all, I want to agree with Michael. I think we're going to get through 50, and I think we're going to look at it in the dust at some point. But to be consistent, I have said over and over, as you know, that I thought we might stall out at 50 because it's such a psychological barrier. And we saw one increase in margin requirements. And I noted that. I think I retweeted it to Craig, if I remember correctly. And this is what they do. I mean, they keep increasing margin requirements until, you got to put up basically the cash cost for the commodity. And then you see the market fall off. We're getting that direction. I'm not surprised. I got let's say, I won't say angry, but a agitated member this morning. First thing I get up, I haven't even had my coffee. What the hell's wrong, David? Silver's at 51 and every one of my stocks is down. What I said was, look, normally the shares lead the metal. And this is the pros taking profits in the shares and selling it off. And it's like they get the memo ahead of everybody else. So I don't want to put on the foil hat too much. There are times where these markets do what they do because of the setup. And this is one of those moments. And I do want to show a chart later on, Elijah, but I just want to hand it over to my colleagues and hear them. And I'm not making this an I'm a right and, whatever, because I want to see a couple more days of trading, but I'm not shocked that we hit that magic number and all of a sudden the big sell-off. So I'll leave it at that. Thank you.
Yeah, well, in the futures, we watch the front month contract. Now, I know spot is above the front month contract. And it got to 51 and dropped back under 50 slightly. So it made new highs. Futures did not. They stopped at 49.76, a couple cents below $50. So some guy said, I'm going to sell the nearby future just below 50 and risk a nickel. Okay, make a dime. Okay, well, they're getting a sell-off here. Fine. Okay, I think it's idiot selling. Our assessment technically is that silver is about to make a quantum leap to a new reality. It's not in a bull trend. It's in a total shift phase in its price zone that it's lived in for 50 years. 50 highs, basically 20 is sort of a low, and it just lived there forever. Go to the Federal Reserve of St. Louis, Fred, and you can punch up charts like lead or zinc and go back in price history. And they'll have monthly close-only chart going back to the 1990s anyway. And you'll see that they lived in a zone for quite a few, decade and a half or so, both those base metals. And in 2006, very late that year, silver and gold were already in a bull trend at that point. These metals took off and tripled in value, base metals. And since then, they've come back down, but they've never come back down into that prior zone of reality. They live in a new zone of reality that is double or more on average for the last 10, 15 years of what it used to be back in the 1990s to 2000. Well, silver's still in that first range, okay, where it was from the 1979-80 high, the 2011 high. Gold's above the 2011 high, copper's above the 2011 high, and silver's still contained here? Give me a break, okay. We know the fundamentals. I don't try to keep up with them too intimately because that's not what we do. But the technicals argue to us that we're about to blast out of this range and not just have another nice leg up, but move into a price zone of new reality. I'm betting it's well over 100. It may be between 100 and 200. And I think a lot of that's going to occur in a handful of months, 5 to 6 months. We're waiting on one trigger. That's a spread relationship between gold and silver. And we run momentum studies of it as well. Now, everybody looks at the ratio, the 80, 70 to 1 type thing. We do it a different way. We divide silver to gold, express it as a percent. And right now, silver is about 1.2% of the price of an ounce of gold. That's extremely low going back 50 years. It's been over 2%. In 21 of the past 50 years, silver has reached 2% of the price of gold. And some of those weren't even bull market years. Okay, so we're very submerged, but there is a very clear structure on the spread charts. When you plot the spread chart, silver versus gold, there is a pending triple top breakout at 1.31%. So we're not far below there. When we cross that level, the same thing happened to its spread versus gold in 1979 and in the fall of 2010, just before silver went totally vertical. It went from like 20-something bucks to 50. Boom. All in a handful of months. The spread was the tell. And we're watching that. We think it's going to break through. And our momentum of the spread suggests that even a lower level than that 1.31%, which is a prior double top, will break out before that. And when we do, when that spread breaks out, I'm putting the seatbelt on. I think silver is the place to be for the next 2 quarters, and the move could be enormous. And you look back and say, oh, now I understand why. Supply demand's been tight, et cetera, et cetera. Market has been at an irrational level for too long compared to other metals, for example, that have done the same thing, had a tantrum and moved to a new reality. Anyway, that's my major comment.
Michael Oliver's breakdown captures a key reality many still underestimate. Silver's move above $50 isn't a blow-off top. It's the ignition phase of a long-term trend that's been building for more than a decade. His momentum indicators point to deep, systemic under-ownership of silver, both institutionally and in retail portfolios, relative to global liquidity. And that imbalance, combined with physical shortages at major mints and exchanges, suggests that this move is fundamentally underpinned, not speculative. This is the perfect storm that long-term metals analysts have been describing for years: the convergence of monetary distortion, supply exhaustion, and structural demand growth. Silver's dual role as both industrial necessity and monetary refuge means that when monetary confidence erodes, its upside can be asymmetric and explosive. And now, as both Oliver and Morgan emphasize, that cycle is unfolding exactly as predicted.
Yeah, so this is a chart from Matt Watson. He's an analyst that does all the metals across the board based to exotics like iridium, which I know almost nothing about. So this is a chart showing silver demand, what he calls the low case. And the red line is all silver production, which means the black line, which is the mining. And the red line is mining plus recycling. And what you see from 2024 onward is that basically we're in a deficit situation based on industrial demand alone, and that we've been in a deficit for the last 4 years or thereabouts. Now, that's what Jim Dines used to call a natural corner. We've all heard about, ad nauseum, the hunts try to corner the market and all that. Well, what Dines said is there'll be a time where the market forces for industrial use only will corner the market. In other words, we won't be able to mine and recycle enough to meet the demand. Well, that's what this chart shows. Now, where I disagree with Matt honorably is the silver or gray bar on there shows investment demand. That investment demand is roughly 200 million ounces consistently from 2025 to 2050 for the next 25 years. Well, no one knows the future, but I contend that as we move into this paradigm, which is one of my main themes from day one when I learned about honest money, is that you can't print your way out of this mess, which means more and more people are going to be seeking real truth, which means real money. So those gray bars, you could double and triple them. And not to be too nitpicky, but the line at 2020 shows 200 million. That is incorrect. It should be up here, if you can see my cursor, at about 1.25. Because in that year alone, the demand for silver in quote unquote physical terms was 320 million by the ETPs and the normal 200 million by retail for like 520 million ounces in that 1 year on investment demand. So if we can do that in 2020, we can do it in 2025. So I think this situation is, Michael and Craig have said, and many of us, that we're getting into a new paradigm. I don't like to use that lightly, and I think Michael said it best. I mean, we're in a situation where reality is going to shine through on all the naysayers like they can't believe it. I mean, we get through 60, 70, people are going to view in the one-handed salute going, oh, I hated Morgan, or he's an idiot, and oh my God, look what's happening now. I don't have too many detractors on X right now. I'll put it there. I'll give it back to you. I'll quit sharing the screen, and that's the low case, by the way. If things go higher for AI or EVs or what have you, it'd be beyond that.
Yeah, that reality's been there for a while. We know that. Recent years where the supply demand is the way it is and demand increasing, supply is not, et cetera. And yet price hasn't responded in a real way. I mean, you think about dollar terms also. 1980, $50. In real dollar terms, where would it put us now? It's probably 250, okay? In the decay in the value of the US dollar, not relative to other currencies, but in real buying power. Even over since 2011, money supplies increased like 150%. Okay, has silver increased that much above the 2011 high? No. Okay, so there's all kinds of realities out there that we know exist. We scratch our heads and say, this is ridiculous. Okay, we do anyway. And we know when it changes, it could change in a way that is, well, we've seen it in many markets. We've been around long enough to see when a market gets overvalued for too long, it gets ridiculous. In hindsight, everybody calls it a bubble. Of course, when it was happening, nobody called it a bubble. Or a market gets suppressed for so long that people think, oh, that's a new reality. It's a piece of crap. We don't, who cares about silver anymore? And it suddenly says, I'm going to wake up. Markets make mistakes. Investors make mistakes in terms of allocation, proper pricing in relation to reality. These things happen. Markets aren't always rational. And I'm arguing that silver was irrational, especially for the last 10, 20 years, of not ever coming up above this base range high that virtually every metal in the world has done. And not silver? Oh, okay. What for? And now it's moving with gold now because it's a monetary metal. But when silver engages on the fundamentals, like the graph we just saw, it'll have its own life. And I think it's going to move to a new reality. And again, if you do a dollar conversion, $200 is not irrational whatsoever. And sometimes when markets are too irrational one way, when they correct the other way, they overcorrect. Okay, you go way beyond what the new reality might be in silver. Maybe silver's going to live in $100 to $200 range for the next 10, 20 years. But it might reach 200 and fall back to 150. You'd get my point. And there's a new reality. The technicals are arguing for that, especially the long-term momentum technicals and the spread relationship to gold. Argues that silver, just to go back to its normal reality, let's say 2% of the price of an ounce of gold, which it's been 21 of the last 50 years. You've seen it at that level. In bull markets, silver spread to gold goes above 3%. In 1980, it went to 6.5%, the price of gold. But let's say it just goes to 2%. Well, what's 2% of $4,000 gold? Okay. What if gold goes, and we've been arguing this, and does what it did twice before? It had bull markets in the last 50 years, both of which were 8-fold gains, bear low to bull high, under circumstances that are far less dramatic and earth-shaking than what we have building out there now. If gold did it again a third time, had another 8-fold move, we'd be 8,500. Well, what's 2% of that? Okay, you get my point. Silver's going to move into a new reality. This selling at 50, I love it. It tells me the idiots are still there. They stick a nickel in front of a freight train, and they got, quote, overbought situation on a short-term basis, but they don't see the larger context. And it wouldn't shock me that when we finally go through 50, we have a situation where we close one, I'm talking futures now, December futures. They're 47 something right now. They were up to just below 50 today. When they go through 50, it wouldn't shock me, and I'm not predicting, I'm just saying this would be justice. You close one day out at 49, next morning you open $3 higher, limit up or something, because force majeure, something going on, one of the fundamentals kick into gear, and suddenly you don't give these guys a chance to stop out of their short position. They put on at 50. You nail them to the wall and see if they can get out. And it wouldn't shock me that that's the way it happens. So I love seeing the selling at 50 because it tells me the idiots are still there.
The recent pullback in silver prices, far from being a warning sign, is the natural and healthy recalibration of a market that has moved aggressively in a short span of time. Markets never rise in straight lines, especially ones as structurally constrained as silver, but each retracement in this cycle represents renewed accumulation, not exhaustion. Technical corrections are the foundation upon which sustainable bull markets are built. The long-term charts still point decisively higher, and both Oliver and Morgan emphasize that pullbacks within a confirmed breakout are often the strongest buying opportunities of the entire cycle. For silver stackers, this moment carries emotional weight as much as financial validation. For years, they were told that their conviction was outdated, that digital assets had replaced metals, that fiat systems were unshakable, that gold and silver had lost relevance. Yet history is proving otherwise. In an era of over-leveraged sovereigns, currency devaluation, and geopolitical fractures, real assets are reclaiming their rightful place as stores of value. Silver's rise above $50 is more than a price event. It's a global statement about confidence, scarcity, and the return to tangible wealth. Looking forward, if industrial demand continues its projected 5 to 7% annual growth, and mine supply remains flat or declines further due to cost inflation and ore depletion, the resulting structural deficit could redefine price discovery altogether. According to data from Metals Focus and the Silver Institute, the global silver market has already been running an annual deficit exceeding 250 million ounces, one of the deepest in recorded history. If these imbalances persist while investment demand accelerates, Especially from sovereign funds and large institutions finally acknowledging silver's dual role, the upward pressure on prices could become self-reinforcing. For long-term holders, the path forward is as much psychological as it is financial. Silver's cyclical pullbacks test conviction, but conviction is exactly what has brought stackers to this defining moment. Those who understood the fundamentals, the tightening supply, the debasement of fiat currencies, and the historical mean reversion of the gold-silver ratio, are now witnessing validation in real time. Ultimately, this bull market in precious metals is not just about price, it's about a paradigm shift. Decades of financial engineering are giving way to an era where tangible assets, rather than derivatives and credit, define real wealth. Silver's breakout past $50 marks a symbolic and structural turning point, one that reaffirms faith in sound money, discipline, and patience. So, whether you're a seasoned stacker or a new investor drawn to the unfolding story, this is the moment to stay informed, stay steady, and stay long on conviction. As always, thank you for watching, and remember to like, share, and subscribe to stay updated on every major development shaping the future of gold, silver, and global finance. Thanks for watching.